tell me about how you can trade bonds and whether because I read a lot of your documentation around how it's essentially actively managed portfolios,
Mm.
and that you actually use the forecasting and the market activities to deliver better than average returns, so to speak, for your investors. Can you delve a little bit into that?
Okay, so there's at an absolute return level, we have a macro down approach where we look at the economy and look at the direction of rates as well as what the overall macroeconomic environment is telling us about potential default risk, credit risk, and around an economic contraction. And so, from a macro point of view, they're all important signals. We then also apply a bottom-up analysis approach where we look at the underlying issuers, and we look at them for two reasons. One, we want to assess value versus on a credit margin basis as to where they're trading in the market. So some might look cheaper than they will in a short period of time. Some might become an upgrade,
Yep.
and some might become a downgrade. And where they people form opinions based on items that come through the media. We don't do that. We go in and do the analysis and come back with a firm in-house opinion.